It's a sunny Thursday here in Lagos, Nigeria, and you're welcome to Business Incorporated live on Channels Television. Now, here are some of the stories buzzing for today. South Africa posts largest current account surplus since 2022. Zimbabwe seeks $200 million AFDB loan to tackle its debt default. And Ethiopia targets wider budget gap as government spending drops 21%. Great to have you join us. I'm Anita Edet. First, let's get a check on the global commodities markets. And now, oil prices edged lower today, pairing earlier gains after Middle East tensions flared up with the U.S. attacking Iran and Tehran targeting Washington allies in the Gulf. Now, U.S. crude oil futures for July fell 0.78% to $89.33 per barrel, while futures for the international benchmark Brent crude August delivery fell by 0.95% to $92 per barrel now. So that's it on the board there. For the WTI, as you can see there, 0.78% drop for the WTI, $89.33 per barrel. So now, just as this happened, the Kuwait had shot its airspace and intercepted projectiles earlier today, while Israel has warned of launches from military strikes from Lebanon towards communities in the country's north. Now, the latest escalation follows U.S. Strikes on Iranian military infrastructure ordered by U.S. President Donald Trump. He ordered the U.S. Central Command and said it targeted surveillance, communications, and air defense assets that pose a threat to American forces and commercial shipping in regional waters. Now, from the oil market, we go to the metals market, where we see that the gold prices rebounded from a 6-month low today on short covering as investors await a key inflation report from the U.S. that could shed more light on the Federal Reserve's policy outlook. Now, spot gold rose by about 0.33% to $4,000 and more than $4,000 an ounce. As you can see here on the board, spot gold was down by about 0.53% at $4,103 an ounce. Spot silver, that's in other markets, we see it's also down almost 1%, 0.97% at $64.115 an ounce. Now, for the other markets that we track around the globe here, platinum was down by a massive 1.31% when you compare that with other metals on the metals market here, $1,668.90. For palladium, it was the only gainer on the metals market for Thursday, last time that we tracked, 0.45% on the uptrend, $1,251.50 for that metal there. And for copper, which we earlier mentioned that on Business Morning, but the copper is down by almost 1%, 0.99% at $6.205. So that's it for the markets for the metals markets. Now, let's go into the news aspects of Business Incorporated, and we're starting off first with Zimbabwe, where the Zimbabwe's Finance Minister Mthuli Ncube has announced that the country is in active discussion with the African Development Bank, AFDB, for a $150 million loan. Now, this funding request is part of a highly strategic, delicate push by the Zimbabwean government to clear its crippling billions of dollars in external debt arrears and bridge the gap towards the international markets, international economic re-engagement. Now, this $150 million loan facility is being eyed via the AFDB's Transition Support Facility, TSF, which is specifically engineered to help eligible debt-distressed nations clear arrears and normalize relationships with global creditors. Now, Zimbabwe has been effectively locked out of international capital markets since 1999, following defaults on loans from major multilateral institutions, including the World Bank, the Paris Club, and the AFDB itself. Now, Zimbabwe is currently saddled with roughly $23 billion in total debt, of which nearly $11.7 billion is external debt. Now let's head over to South Africa. That was a top headline. The country's central bank has just released the balance of payment data for the first quarter of this year, And the numbers are a major win for the rand. Now, the South African Reserve Bank, that's the SARB, reports that the current account surplus widened sharply to 2.4% of the gross domestic product, the GDP. And that's equivalent to 190.7 billion rand, which is about $11.5 billion in dollar terms. Now, this is a massive jump from the 0.6% surplus of about 50.2 billion rand recorded in the first quarter of last year. And it completely blows past the market expectation of a 1.1% surplus. Now, as a percentage of the GDP, this marks South Africa's current account surplus since the first quarter of 2022 and the largest overall quarterly surplus since the third quarter of 2021. And now, still talking about our country's economies, in Ethiopia, the East African country's Council of Ministers has just approved a record-breaking draft federal budget of 2.34 trillion birr. That in dollar terms, that's about $14.7 billion for the upcoming 2026 and 2027 fiscal year, starting from July the 8th. Now, the amount represents a massive 21.2% jump in overall spending compared to the initial 1.93 trillion birr approved for the current fiscal year. And this comes as the government faces mounting external economic shocks alongside major international structural transitions. Now, in a budget speech delivered to lawmakers, Finance Minister Ahmed Shide clarifies that while the government is pushing to hard finance its 10-year perspective development plan, external global factors are severely stretching public coffers. Now, despite the sharp rise in absolute spending, the Ministry of Finance presents a relatively optimistic outlook on the actual fiscal gap, banking heavily on aggressive economic growth to absorb the shock. Okay, so now from the countries, let's shift our attention to the commodities market, and this time we're talking elubo. Well, is a Nigerian name for yam flour, which is used to make amala, and that's a staple food here for many Nigerians, particularly the Yorubas. So that's the southwestern part. However, its key ingredient, which is yam, is primarily produced in Benue State. Now, as of June of this year, the price of a pint of bucket of yam flour has risen by about 25% from 8,000 naira in June last year to 10,000 naira. Now, this increase is higher than Nigeria's inflation rate of 15.69%. So now, to give us details about this, let's bring in Adekunle Favor, who is an analyst with Financial Derivatives Company. Thank you for joining us, Adekunle.
Good afternoon, Anita. Thank you for having me.
Okay. All right, so now, my first question, if I can ask more questions apart from that. Now, what factors have caused this price increase? Also, given the price of petrol and diesel, logistics costs, which is a crucial factor in pricing, which has risen significantly. And what is the price outlook for the coming month?
Okay, so yes, you're right that the price of the yam flour, which is popularly known as elubo here, in Nigeria, most widely consumed by people in the southwestern part of Nigeria. The price of that commodity has increased by 25%, to 10,000 naira year on year. And there are a number of factors that are responsible for that. One being that yam, the major product that we use to produce yam flour, and it's a seasonal commodity, right? And, at the beginning of the year, we said that yam, one tuber of yam was going for about 3,000 naira, and now one tuber of yam is going for 5,000 naira. So there's an increase in the price of yam. That's for the demand side. Then for supply, there is a large issue of insecurity in yam producing states, right? Like Benue, Nasarawa, Taraba. And this is discouraging farmers, from consistently farming, which has reduced supply of yam. There's also transportation cost and logistics costs. And we all know, there is an uptick in the price of diesel and petrol. They have gone up by over 50% this year alone as a result of the current conflict between US and Iran, which we don't even know, when there would be a truce, for that. So these factors, coupled with the fact that yam flour, it's energy intensive, meaning that electricity is used in the milling process of yam to convert it to yam flour. So these factors have contributed to an increase in the price of yam flour over the past year, I'll say.
Okay, so now...
And
okay, go ahead. Just 20 seconds.
Okay, the outlook for the price of yam flour, the harvest season of yam is towards August and September. So it is expected that, there will be, just a little decline, a marginal decline in the price of the yam flour, however, not as, the previous year. Yeah,
Aber die
because that is not
Märkte,
the
die
only
haben schlecht
factor that
reagiert.
contributes to,
Hast du gesehen?
the price of
Plötzlich die
yam flour.
DAX ist in
We still have other things like transportation costs, logistics costs, and we've said that the price of these things have gone up because of the increase in the price of diesel and petrol.
Okay, so now that takes me to my actually let me jump my question to my third question. Now, how might rising prices of this staple influence the producers' decision to switch production to more profitable goods, and what implication would this have for supply and prices?
Okay, so talking about the producers and the consumers as well, even of this popular staple here in Nigeria. We don't expect that both producers and the consumers would automatically stop consuming these things or producing because, the price has, increased. Rather, there are substitutes in terms of consumption and even production. For example, there's the popular cassava flour, which is known as lafun. That is a popular, substitute for amala, and sometimes even mixed with the water yam served, widely in parties and even like in buka restaurants that is similar to that. So for both consumers and even the producers, they would alternate between these producers as well, alternate between the production of the cassava flour, as prices continue to increase. So there is not going to be like a total stopping of the consumption or the production of this commodity because, like I said earlier on, it is widely consumed in Nigeria and very popular, especially among the Yorubas. So.
Of course, I'm not very typical of a Lubo, but I guess I might try, even though the price is expensive at the moment. But thank you so much for your analysis on the show. Adekunle Favor.
Thank you for having me.
Now, we'll talk about the markets. Well, before we head to the European markets, let me just give you a little brief about the African markets first. The African markets, they're mostly mostly kind of like a mixed picture. But Nigeria's stock market, yesterday we saw some rebound, but at intraday it was in the red, 0.11%. For South Africa's Johannesburg Stock Exchange Index was in the green, 0.74%. Now, the other two markets within the African region, EGX 30, 1.08% down, and the Nairobi Stock Exchange All-Share Index for Wednesday's close, tied in the green, 0.03%. So that's it for that market there. Now, so let's turn, before that, if we can have a look at the Middle Eastern markets there. The Middle Eastern markets, they were also a little bit tepid. So you see 0.44% drop for the Dubai index, as well as the Abu Dhabi index that was down by 0.4, almost the same margin. For the Tadal Wool, that was the only gainer there, 0.14% at intraday, 027.72, while the Qatari Stock Exchange All-Share Index was down by about 0.25%. So today is the last trading day for them. Thursday is is actually their last trading day for the week. So now, let's, if we can turn our attention for a look at how European markets are trading today. DW correspondent Chiponda Chimbelu has been keeping an eye on them for us. Now, Chiponda, nice to see you again. How are European shares trading today?
Well, and yet the European shares were mostly in the green today. They were in the green today. And then, of course, came the ECB rate hike. They raised, of course, the interest rate to 0.25% higher. So it's now at 2.25%. And that was an announcement, of course, made by the European Central Bank just about half an hour ago. And right now, Christine Lagarde, the president of the European Central Bank, is actually addressing journalists in a press conference. But what we've seen really after that decision was basically the pan-European stock 600 drop a couple of points. It's still in the green, but it's down from, say, 0.89% to 0.34% right now. And the DAX, which was also in the green, is now in the red. So things look quite a bit different after that ECB rate hike, even though markets had already priced in, and it was expected that they would be 0.25% higher. But for some reason, markets are reacting to that interest rate hike. So we have to watch and see what is being said by Christine Lagarde in that guideline to see whether there's any in her statement, see if there's any guideline regarding where things are headed for the future. The ECB has, of course, also lifted its 2026 inflation forecast to 3% and cut the growth forecast for the Eurozone to 0.8% because of the energy shock. So maybe those are the things that are causing some concerns on the markets, because, of course, as long as the Iran war continues, energy will continue to be a theme on European markets, especially.
Okay, so now, Chibonda, I know that this week is the ECB's rate decision, and next week we'll be looking at the US Fed's decision on interest rates. So now, but to another topic, Germany could be heading towards a recession as an energy price shock linked to the Iran war puts pressure on economic growth, and that's according to a leading German economic research institute. So, Chibonda, what are the latest expectations for the German economy?
Well, economists at the German Institute for Economic Research here in Berlin halved their growth forecast for 2026 to 0.5% from 1%. And that is because economic output is likely to shrink in the spring and summer quarters because of the energy price shock. So energy is once the theme there. And that is something that would, of course, result in a technical recession, 2 consecutive quarters of no growth. And of course, and yet it's also worth noting that Germany's economy hasn't grown steadily since 2019. It has been navigating, of course, multiple shocks since the COVID-19 pandemic. And the fact that the country relies heavily on exports does also mean that it is especially vulnerable to global uncertainty. So if the global macroeconomic environment does worsen, Germany's economy could shrink by around 0.5% in 2026. And a lot of that will be hinging on how long the Iran war lasts. Now, this is, of course, just the latest downgrade for the German economy. The gloomy prospects of Europe's industrial powerhouse are definitely one thing that economists seem to be agreeing on right now.
Okay, so finally, Chibonda, is there any sign of relief or light at the end of the tunnel?
Well, probably not. And of course, the ECB's rate hike is not going to help the business environment when it comes to borrowing and, of course, getting consumers to spend more. But maybe there is a forecast that could be some good news depending on how things go. And there's one forecast that does say that if Germany were to win the World Cup, for instance, that could potentially help spur economic growth. And that's according to an economic think tank, the E4 Institute. It said that a World Cup win could have a positive effect on the economy. And there is another survey by the Nuremberg Institute for Market Decisions, and it says that people, of course, would be willing to spend more the deeper. So the better the German national team performs at the World Cup, the more people would spend as well. And of course, we do know that Germans could use some good news to boost consumer sentiment and the overall mood in this country. Now, the E4 Institute also bases its conclusion on research, which actually shows that countries that win the World Cup do actually experience an economic growth spurt. So there is a basis for that. And however, that's not the case for the runner-up team or any team that finishes third. So the German team does need to win that trophy if its participation in the World Cup is to add any growth to its country's struggling economy and, of course, lift spirits among Germans who haven't had too much to cheer about economically lately.
I just hope that they would have some cause to cheer, in the course of time. Thank you so much, Chibonda Chimbelu, DW correspondent, giving us details about the European market as well as German economy.
Thanks a lot.
Okay, so now let's come back home and to the digital assets aspect of the market. And now, as part of efforts to strengthen the country's digital economy and provide greater protection for investors, Nigeria's Senate has advanced the Virtual Assets Providers Regulation Bill. But before we go to that, let's take a look at the board here. For 2 days that I've been reporting this cryptocurrencies market, we've been seeing a flurry of red. It was just like a decoration of red, but I think the reds have actually given way to the greens. At least to a larger margin. We see Bitcoin up by almost 2%, 1.92%, 62,829.16, while Ethereum is also up by 0.71%. BNB is also up. Okay, so now let's talk about the cryptocurrencies market, the digital assets market, and we have a financial market analyst, Rume Ofi, to tell us more about that. So, Rume, thank you for joining us. First, we're talking about the proposed legislation which seeks to establish a regulatory framework for cryptocurrency and digital assets operations while promoting transparency and tackling illicit activities in the sector. So now, what is the impact? What impact is this proposed virtual assets service providers regulation bill expected to have on Nigeria's digital economy and cryptocurrencies industry?
Thank you very much. It's nice to be here again to talk about this. And this has been long coming. Personally, I urged the Senate in 2021, February 29th, 21, I beg your pardon, then to come about a hearing on cryptocurrency and digital assets. 5 years down the line, we're having that discussion. Unfortunately, we've wasted time. We're a country where we tend to learn for our own experience and most times even fail at learning from them at some point. You know, this has been a way where the world is headed. For example, like the US, Donald Trump has been at the forefront, which makes it very clearly a political will. And for Nigeria, which is the giant of Africa, we're supposed to be leading, but unfortunately, we're not moving in a very unique pace compared to countries like Ghana, Kenya, and even South Africa, for example. But all things being equal, I will give it up for this attempt made at the floor of the Senate to come up with a bill. I think the bill was sponsored by the Deputy Senate President, and it was read by Taha Muguno, Senator Taha Muguno, for making sure exactly that the industry is well guarded, because illicit activities have happened in the past where people actually go on the ground to either launder money or finance certain ideologies, you know, but because all of these are happening because there's no law. And I always say that where there's no law, people tend to do what they like. There's no transgression. Again, the truth is we started late in terms of putting regulation that works, because a lot of our innovators, a lot of our funders, as a player of it in this industry for almost 10 years, I can tell a lot of them have gone offshore. So what we need to do right now is to put up this thing as quick as possible. If you ask me, even before the next election, makes it very fantastic for innovators to come so that we can also align ourselves and our industry to the $1 trillion economy of the current administration. I must give it to this administration. Truth be said, they promised to do a few things around the crypto and blockchain economy to aid financial inclusion, and they've done it significantly well, but there's a lot of improvement. There's a room for a lot of improvement compared to the last administration, where a sitting central bank governor personally demonized and supervised the cryptocurrency.
Rume, I know you want to give us more details about this regulation, and I would say it's better late than never. But so we thank you so much for that analysis, and we hope for the better things to come within the crypto digital assets market of Nigeria. Thank you so much for your time.
For having me.
So that's a wrap on Business Incorporated live on Channels Television. We see you next week.